Welcome back to my morning pot analysis videos on Thursday the 25th of April with me, Richard Perry, market analyst at Hantec. Let's have a look at euro dollar, where we've seen a decisive downside break. I talked earlier on in the week after the Easter period of little real trading. We've seen the reaction coming in strongly dollar positive, breaking down the key support floor at 11.75. Now that really does continue the run of this downtrend channel lower. Now if I zoom out all the way to 2017, you can see that next support is $1.1110, but then you'd be looking at $1.10 big figure coming in as the next sort of key psychological area of support, where the market is likely to be looking at as a key potential area of target. You can see here, if I zoom back in, the channel currently bottom comes in around 10.50, so there is room for downside potential, but also you look at the fact that the RSI tends to go towards 30 in these situations, in these bearish legs lower, and therefore there is further downside potential in this move. And considering the MACD lines have just bear crossed lower, again stochastics accelerating lower, further downside potential really does seem there. Now you'd be looking at selling into strength, and the overhead supply of the 11.75 to 12.10 area of old support becomes your basis of new resistance on the upside. And you can see here on the hourly chart where the market didn't really get towards that 11.60 overnight before rolling back lower again, but there is considerable resistance overhead now for any sort of potential technical rallies to sort of fail and roll over again. So I think that would be the way to play it. Although you do have downside potential in this current move, I would say any sort of technical rally is a chance to sell. So wish you good luck in your trading, and I'll speak to you later.